Hey, what is up traders? Key levels play a very important role in trading. From key levels we are looking for trading opportunities and we apply key levels for analysis and for making predictions. In this video I will teach you how to identify key levels. We will execute structure analysis together and I will show you how to identify the strongest key levels. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. We will execute a structure analysis on a New Zealand dollar pair. The first thing to note about a structure analysis is that we are looking for key levels on higher time frames, and I always start structure analysis from a daily time frame. The second thing to note is that we have two types of key levels. We have vertical key levels and we have horizontal key levels. So first, let's identify horizontal key levels together. Hey traders, if you want to learn how to trade, if you want to learn my trading strategy, I want to invite you in my premium educational group. There I will show you how I trade live. There I will show you how I analyze the market live. Also, you will get the copy of my ebook with my trading strategy and a big video course. For more details, check the link in the description below. It is vasilytrader.com/private group, or text me in one of the social networks. I will give you more details. So how do we look for key levels? We are looking for the levels that were tested by the market in the past and from where we saw strong bullish or bearish reactions. For example, take a look at that structure, traders. Why here we have a key level? Because in the past it was a very strong support. You can see that from that structure we saw a very strong bullish reaction, right? But then once that structure was broken to the downside, it turned into a very strong resistance. And just recently from that structure we saw a very strong bearish reaction. The next strong structure that I see is right here. Take a look at that structure, traders. Why that structure is important? Look how the price reacted to that structure in the past. It was a very strong support. Multiple times the price bounced from that support. Then it was broken to the downside. Yes, then it was broken and it turned into a very strong resistance. And from that we saw a very strong bearish reaction. Then after the breakout, you can see that that structure turned into support again. And 2 times in a row it was respected. So now we assume that because that structure is broken to the downside, it turned into a very strong resistance again. So from that structure, we can expect a bearish reaction. The next strong structure that I see is right here. It is a recent structure. You can see that first it was a minor support, and after its breakout, we saw a very sharp bearish rally from that structure. You can see how sharply the market dropped. The next structure that I see, traders, is right here. Again, a very strong demand area. Yes, in the past it was a very strong demand area. You can see that multiple levels within that zone were respected by the market, and after the breakout it turned into supply area, into resistance area, and from there the market dropped sharply. By the way, traders, if you want to learn more about supply and demand zones, watch this video. There I taught how to identify supply and demand zones. And the last strong structure that I see right here, traders, is that structure. Yes, it is just one single level, very strong structure from where the strong sell-off initiated, from where the market dropped sharply. Definitely we must take that structure into consideration. But one thing is missing right here. We spotted a lot of resistances, but we don't see any support. Let's look left at structure. Do we see any structure here on the left? No structures. When we don't see any structures on a daily, it is the signal for us to check these structures on a weekly. So we open a weekly time frame And we look left at structure, and we are looking for the closest strong structure on the weekly. And here it goes, traders. We have here a very strong weekly structure. Yes, very strong weekly demand zone that the market is approaching right now. So returning back to a daily time frame, you can see that here we have a lot of resistances and one very important weekly support. Now let's discuss vertical levels. And what are vertical key levels? Vertical key levels are the key levels based on trend lines. So our task will be to identify strong trend lines. And traders, very important note, we will apply the trend lines respected at least 3 times in a row in the past. Only these trend lines will be considered to be key levels, key vertical levels. If you see a trend line that was respected just 2 times, I would suggest neglecting such a trend line because most of the time it won't be strong. So let's look for such trend lines. And based on such a perspective, unfortunately, I don't see any trend line. So what we should do, we should zoom out the chart and look for such trend lines. And if we take that high, traders, and draw a trend line, here we may spot this major falling trend line respected 3 times in a row in the past. And you can see how strong bearish reactions we saw from that trend line in the past. So definitely in future, once that trend line is reached, we will look for shorting opportunities from that. And moreover, note, traders, that I draw a trend line based on wicks. No, but not bodies of the candle. It is very important. And here, traders, I see one more trend line. If we take that low and draw a trend line, here we have one more very important trend line. And again, this one here was respected 3 times in a row in the past. So definitely it is a very strong trend line. Moreover, traders, what we should note right here is that currently the market is approaching a very peculiar zone of confluence between the horizontal weekly structure support and the falling trend line. And most of the time, this will be the strongest key levels, the key levels based on vertical and horizontal structures at the same time. And once we spotted our key levels, how do we apply them? First of all, you should wait for the moment when one of the key levels is reached. You're patiently waiting for the test of a resistance or a test of a support. Once the price reaches your key level, the next step is to wait for a confirmation. You are looking for some price action pattern being formed on lower time frames. For example, if the price reaches that resistance, your task will be to look for some intraday bearish price action pattern. So on a 4-hour or on an hourly time frame, you should look for a double top or a head and shoulders pattern to short. If the price tests this support, you should look for a confirmation on lower time frames, and you should look for some bullish price action pattern. Double bottom, inverted head and shoulders pattern, the ascending triangle. Only then you can open a trading position. And why are we looking for a confirmation? The point is that quite often the market tends to break key levels, and only with confirmation we can avoid losses. Alright, traders, 99% of trading strategies are based on key levels. For that reason, it is so important for you to learn how to identify key levels. Open a random chart, open a daily time frame, and look for structures there. Look for vertical structures and horizontal structures. For more education, for more tips, join my premium educational group, the link in the description below. There I will teach you how to identify key levels and how to trade them. Also, traders, if you have any questions, please ask me in the comment section. Lastly, please like this video, subscribe to my YouTube channel, and I will see you next week.